welcome to the Payments Leader Show. I'm your host, Adrian Evans, and you know on the Payments Leader Show, what we're about is looking at the opportunities and embracing the opportunities across the payments ecosystem before we then look at the challenges. I'm very excited today. I've got a very strong recommendation of an industry leader and thought leader in particular, as well as an industry practitioner. So Alessandro Hatami, who is been recommended to me by Matt Oldham from Attender, who are blazing a trail in the unattended space. So without further ado, welcome to the show.
Thank you very much, Adrian. Lovely to be here.
My pleasure, my pleasure. So I've always think the guests are the best people to introduce themselves in terms of their position in the payments ecosystem. So I wonder if you could tell us a bit more about yourself.
I'd love to. Thank you very much. I'll keep it very brief. So I got into payments in the early noughties by joining PayPal. So I became employee level in PayPal in the UK, driving their merchant services activity. Then I became the CEO of Paypoint.net, which it was a digital payments business. It was processing 4% of the UK payment processing online, which was at the time was quite an impressive amount of performance. I then joined Lloyds Banking Group as the CEO of digital banking, head of digital payments. And about 10 years ago, I left the corporate world and I started up my own firm called Pacemakers, where we work with corporates and developing innovation through engaging with smaller firms, not startup, but scale up. So think of us as Korn Ferry or Egon's vendor for companies. So companies need to do something new. We help them identify the right companies to work with. I also remain passionate about payments as a transformational tool for the financial services industry. In doing that, I support lots of early stage companies. So I'm a mentor of several startups. I invest in a few. You may have heard of some of them. If you look at my LinkedIn profile, you'll see who they are. And I also write a lot about financial services transformation. So my first book was Reinventing Banking, was rated as Best Book of Banking of 2022 by Investopedia in the States. And my recent book, written with Megan Johnson, is about financial inclusion, and it's called Inclusive Finance, which is another one of my passions. And as you know, payments is a key core component of financial inclusion. Does that give you a bit of a snapshot of what I've done?
Wonderful. Perfect, perfect. So I wonder if we could explore there, first of all, why are you passionate about payments? What is it about payments that you're passionate about?
Well, I always think about what makes people's lives better. And I think the financial stability is what does that, what gives you that ability to do that. And in order to be able to access financial stability, you need to be able to transfer wealth and transfer goods, receive remuneration for something that you do, or to pay for some service that you receive. And payments has become, since prehistoric days, the means of achieving this. What I also find very exciting is that as we're going through a transformational system in the financial services space, we're seeing all these new products, these concepts created all over the place. At the core of them, what connects these products with the consumer, with the institutions, with the regulators, et cetera, is the payments network. Yeah. So if we were to look at the financial services space as a human body, an organism, and all the different products are the organs, what connects them, what the blood that connects everything is payments. And if that's not healthy, if that doesn't work well, everything else fails. Okay. So I think that's why I remain a passionate supporter of payments and a believer in payments.
So for you, it's I like the analogy there, the sort of anatomy analogy there, but it's almost, you see payments as the supporting piece to enable the whole ecosystem to happen that directly impact all people's lives.
I would go a step further. I think it's a foundation, and it's without payments, no financial product could exist. If you think about it, it's all about transfer of wealth, it's transfer of value, and all of it has to have a framework whereby this can happen. And the payment systems that we have today are that framework that enable this transfer of wealth, transfer of value, not wealth. Yeah. And I think that has to be effective and efficient at all times for the economies to survive. And by definition, if the economy survives, the population and the society that lives on the back of that economy survives.
Excellent, excellent. So I'm fascinated particularly with the area that we discussed in our pre-call, which was about innovation. And the balance
Yes.
always strikes to me. And the great thing is payments in the last decade has become headline news. It's not the sort of plumbers of the financial industry that they previously were. And there's that balance between getting innovation off the ground whilst managing risk. And you've done that at a very large organization. So I wonder if you could bring that to life for us. How do you bring
Um,
innovation to life?
I think what's interesting is in large organizations, I think there's two dimensions to every individual that you speak when you speak of transformation. So if you speak to an executive in a large organization and you tell them about financial transformation, innovation, etc., 9 times out of 10, they're very, very keen to listen to what you're saying. In fact, they may even agree about this vision of transformation that you're presenting to them. They love the idea, etc. But then they go back to the desk and say, how am I getting my bonus this year?
Of
Okay,
course.
which is not by being transformational, but is building the extra return that they have to have in meeting their targets. So I think one of the things that we have to do as a promoter of innovation in a large organization is to be conscious of this fact that innovation as a concept is something that everybody likes, but when it comes to the implementation of it, they always think about, okay, there's a lot of complexity here. So when you talk about innovation, in a way, I prefer not to call it innovation. I prefer to call it evolution, transformation, growth, if you want. So it's a
Okay.
lot easier if you have an innovative idea to go to and you need to sell it internally in your organization. It's a lot easier to sell it as this can generate 3% more growth rather than this will transform the way payments are run around the world.
Okay. Right.
Okay. So I think the short-term focus and something that is within the desires of the person you're talking to, within the needs of the person I'm talking to, is the fundamental need in any type of promotion of innovation.
Right. Okay. So that's fascinating because again, we hear this term innovation, we hear transformation a lot as well, but it is the inclination that actually, I suppose, the most. So if you were to look at a hierarchy of needs there,
Yeah.
would
So
I assume the starting point is keep the CEO in place and make sure that there's not going to be any problems for them. To talk us through the next hierarchy of needs of an
absolutely. I always
organization.
think whenever I advise people in selling innovation internally, is always is to think how businesses operate. And I'm going to piss off a few people by presenting it this way, but ultimately, unfortunately, I have scars on my back to
Yeah, yeah.
substantiate what I'm saying. So the number one reason why an organization will invest in a transformational evolutionary proposition is to keep the CEO out of jail. Okay, so
Yeah.
compliance and all of anything that has to do with compliance. The second layer is to make more money.
Yeah.
So if you sell something, if your proposition allows them to generate more revenues, you will get a lot of buy-in from corporates. The third level is save money. So saving, even though on the bottom line it has the same effect, it sells less excitingly than making more. So spending less is cool, but it's not as cool as making more. And the fourth element is it's transformational. We need to do it. The world is changing. All the other values that we do. So an issue with you have with an innovator is sometimes I'm not saying they're lazy, but they see the transformational nature of whatever they're proposing as so deep that they try to sell that dimension of it instead of thinking, okay, so if this thing comes into our organization, what are the benefits that it will generate? And they should be focusing on that. So, I mentor a lot of early stage companies, and I always tell them, when you have something that is disruptive or innovative in your proposition, do not sell that, but sell what that can do for the organization you're working with. This can make it a lot easier for you to onboard customers. They can make it a lot quicker for money to transfer from your client to another client. This can make it a lot safer for you to onboard a certain type of individual. All of these things are much more important than we are entering the crypto world and therefore we need to think the blockchain is the future, et cetera, et cetera. No, blockchain may be the future. I don't disagree with you, but what the blockchain delivers in what you're selling, not what the blockchain is. If you see the difference between the two, yeah.
Yeah, I suppose it's classical sales really, as in features versus benefits. But I think the added layer added on top of that is a reality, but also a political landscape of any organization, because any
There's
organization.
a lot of innovators, like lot of promoters of innovation within an organization. They're passionate about what they're looking at, so they fall in love in a way about the innovativeness, lack of a
Yes.
better word, of what they're doing, and they feel that that is the most exciting part of it. Yes, it is to them, But remember, you're selling. Okay. And as you said, you have to focus about what is the problem that's going to be solved with this product, with this innovation, with this proposition, and talk about that. And then after they bought into this benefit that is going to be generated, focus on the complexity of delivering the specifics.
So just to touch a bit further on that, what would be your advice to scale ups then, speaking to either partnering with or selling to large organizations about risk mitigation?
Large organization about risk mitigation depends on what perspective you're looking at right now. But I think if I'm talking to an early stage company or a scale up that is trying to sell to a large corporate, in the payment space, but also many other spaces, is first of all to look at who your counterparties are, and place them in different boxes. So whenever you're selling to a large organization, you're not selling to one individual only. Okay, you're selling to several, and selling maybe is the right word, but you're not the right word, but you're presenting yourself to a variety of individuals within the organization. So your first objective in any type of organization is to find who is going to be your champion. Okay, who is going to be the person that is going to promote you and support you. And this person has to be something she has to have a deep, broad understanding and connection in the market, in their organization, and she has to have power. And power usually comes from a P&L. Okay, so try to choose your champion as a P&L holder, and as somebody that has a power of sway within the organization. The second tier behind this person is the people who I call the gatekeepers. These are people who are neutral about your proposition, but they can be pissed off by small little things that you may do wrong. Okay, and these are people, for example, for compliance. These can be people like legal and so on and so forth. Obviously, I'm not underplaying the importance of compliance and legal contracts, but any proposition, if you're a scale up, you've already addressed some of these. But what you need to do is you need to bring these people on board within the corporate that you're engaging with, and selling them the idea slowly to them, and making them become part of the solution, not a gatekeeper for later on. Okay, so bring the gatekeepers within the framework as soon as you can. So don't wait till everything negotiated and agreed to go to legal to do a contract. Don't bypass the procurement guys because they're just going to waste your time. They're going to be creating barriers to your success if you're not capable and aware of this. And the third element is, who is going to be your competitor and your enemy, for lack of a better word, and who's going to be the person that's going to be affected negatively from your innovative proposition that you're doing. Is my new technology that I'm bringing in going to allow to reduce the people who are coding your backend office by 90%, so you have 90% less people because everything done by this AI tool that I've created? Your head of IT is going to have 90% less people, so he or she may not be happy and have a much smaller budget, and therefore they will find reasons why your solution is not right. And these may be intentional, maybe not objectively driven by any specific objective, but they see themselves as being challenged and being diminished by you, and therefore you need to be cautious of them. Ideally, engage with them and make them come your way, or put them inside a frame, or enable them to be gated so that your proposition can be built and proven. And once it's that, then you have a lot easier life going forward. So I don't know if I'm making sense. You have to think about it in a very gated space. And whenever you sell to a corporate, you're not selling to one individual. Okay. Another thing that I'm going to be a bit controversial about is when you're selling innovation, oftentimes the head of innovation is not your best friend. I used to be head of innovation at Lloyd's after I was the CEO of digital banking. So as a CEO of digital banking, I had a real I should be careful. I had a real job, and I had responsibility. I had a budget. I had an implementation and targets. As head of innovation, that became I had a lot broader remit of what I could do, but also a lot less power internally. So I could not be the champion as I mentioned to you for innovation. I could be an influencer, but I could not be a champion. So I think if you're an innovator and you're speaking to a large organization and you find the head of innovation, work with them to get the support and finding a champion for you. And that champion is going to be the one that is going to succeed. So the innovation people, oftentimes selling to them is not sufficient, and you need to go beyond.
Brilliant. No, this is great. You know, we've got a separate part of our business which is about enterprise sales, and this very much is aligned to our thinking about
Oh, great.
identifying the real people with the power from a discretionary spend perspective, and understanding champions, and understanding also those who are not going to be on your side as well. So I want to maybe just switch gears a little bit to what are the innovations that excite you the most, or the, perhaps I should say, what are the evolutions and the potentially commercially successful evolutions that excite you the most in the payments industry?
Well, there's several things are happening right now. Obviously, payments is if it's much broader than just sending X to Y, etc., which is data or money or whatever it is.
Yeah.
It's also about the infrastructure that allows those transactions to exist. So several things are exciting me right now. One is the infrastructure being completely reinvented, which is the whole blockchain technology, and how that is becoming increasingly clear that it's a better system than what we have right now. So if I want to send money from my account, from me to you, I have to go to my bank. My bank authorizes a payment. It goes to some central clearinghouse, and then goes to another bank, and then you get it. And in a crypto world, I just send my money from my account to yours, and it's entirely done.
Yeah.
What was required for that is an infrastructure that has specific rules, specific guidance, specific security. There has to be some guarantee that the value of my currency does not depreciate instantly as it transfer from me to you,
Yeah, absolutely. Yep.
And vice versa. And there has to be protected against any type of fraudulent activity. It has to be secure, all the time, some good things. But conceptually, it is, if I were to create money today with the technology today, I would create a cryptocurrency of some sort, if I were the state that was launching it. Now, the different assets that are being traded, they have different characteristics and different risk profiles, if you want. And we've talked about cryptocurrencies that are just floating assets and just an investable asset. We talked about CBDCs, which are currencies, fiat currencies that happen to be digital. And we have this world in the middle, which is the stable coin.
Yeah.
And stable coins are supposed to be the equivalent of fiat currency, but without the support and the control of the state.
Yes.
Now, there's a lot of politics and kind of visions of the world, etc., that are saying that CBDCs are terrible because they're issued by the state, and stable coins are great because they're issued by a safe and individual company that has only the welfare of the transaction in mind. This is all disputable and all can be discussed, and we can have a nice few drinks and have a discussion about what the future looks like in this space. But ultimately, a stable coin has to be stable, and a stable coin is only as stable as the issuer of that coin is stable. And if that stability is huge, then that coin is a viable currency for transfer of wealth. If it's not, then you are taking a risk. Okay. Yeah. Now, historically, that has been the case for all fiat currencies. All fiat currencies can have runs too. You know, the pound had that a few years ago, and it's now more stable because it's pegged to a variety of currencies worldwide. And this pegging is done by gigantic assets that the central banks hold. Are the stablecoins issuers able to have that those gigantic amounts of assets that they can do, that they can use to stabilize the value of the currency? I don't know. It looks like they cannot going to be that any stablecoins, there's some names, but a stable coin will never be as stable as a crypto. As a CBDC issued by a state.
Yes.
So the euro is not going to be an euro designed by a stable coin provider. Is not going to be as stable as the euro issued by the European Central Bank.
Yeah.
The US dollar stable coin is not going to be as stable as one issued by the US government.
Yeah.
Simple as that. Now, there's a lot of politics involved in saying, okay, but I want to maintain my anonymity with these coins. The state could delete my money, etc. All these kind of issues that one puts with CBDCs, they exist already for any type of digital payment that we have right now. So the minute we move away from cash, the state is in complete control. The infrastructure is in complete control of where your money goes. So I think ultimately we will get to a point where we will have the existing infrastructure of payments will be replaced with something that looks very much like the blockchain technology that we're looking right now. Is it going to be distributed? Is it going to be not? I don't know. Probably will be. but in some sort of agreed mechanism across the globe. There will be products or financial products that will be traded on that, and some of them will be investable products, and some of them will be currencies for transactions.
Sure. Okay.
And we'll see just a very complex world. But I think the migration into a crypto space, sorry, not a crypto space, but a blockchain evolution of our payment system is inevitable, and it's on its way.
Okay. Can I just go back to who's winning here? So we're looking, and again, this is the sort of driver from our business, and our show is we want all boats to rise. Yep. And I think the payment ecosystem has a real opportunity here. But bringing efficiencies to the system seems like, apparently, on the face of things, a good thing for most people to happen. Yeah.
Yeah. So we are winning.
Sorry?
So the public is winning. I think there will be providers and winners that will provide the technology and the infrastructure for it. But I think ultimately is the public that is winning. Yeah. If I were to bet into the sector, I would actually think more about the infrastructure and the enabling connectivity, the wallets, et cetera, rather than the currencies themselves.
Right. Okay.
I think right now a lot of the focus is on which currency, which crypto is the right thing to think about, or an investable asset. I think the framework and the orchestration layer behind all of these wallets, I think, is the most exciting thing. Because even if CBDCs actually become a reality, they will need to have a framework to whereby they can be transferred from one system to another. Will that be a single global network? I don't think so. So there will be several that collaborate in parallel. And I think that those providers are going to be the more exciting opportunity right now.
Sure.
But I'm a pessimist in general, so I'm trying to be realistic at the same time. So there will not everybody will survive. There will be the most efficient ones will do, and the ones that are connected with the biggest revenue, volume generation, and efficiency and stability will be the ones that will succeed.
Sure. There's been some exciting developments or some exciting articles that you talked about recently. I wonder if you could share some of those views, because there comes from no other higher authority than Christine Lagarde herself, which is obviously she was right at the heart of solving the financial crisis many years ago. So I wonder if you could bring that to life for us.
Well, it is an interesting article that she wrote on the FT today, and it's also is taken again on the European Central Bank's website. Ultimately, what she's saying is that in a world of upheaval and transformation and evolution and unpredictability, the world still needs to trade, and value needs to change from hand to hand, and this is beyond the crypto space. So there was always the whole world has always relied on a global currency, which was the US dollar, which is now doing some strange things. So the US market is no longer as open as it used to be. It's a bit unpredictable, etc. And that is not a definition of a stable currency that I can rely upon. So suddenly barriers are put into my ability to send money from X to Y, etc., where I still want to rely on that. So what she is saying, which is obviously not entirely unbiased, is that she sees that this is the global euro moment, so that the euro could become the global currency. She has a point. It's already the second biggest, most common currency after the dollar, but it's also showing a lot more stability than actually stability. It's showing a lot more boringness in dealing with financial matters than the US is doing right now,
right?
Which may be a good thing for a financial services space. So what she's saying is that they probably are seeing the opportunity, or be seeing the likelihood or the potential for the euro to become a global currency if things continue as they are right now.
So as a studier of economics for the last 30, 35 years, when doing economics 101, and you always see the US dollar as the vehicle currency throughout the world. I think this just shows how exciting the payment space is, how interesting it is, but also the opportunity that it can present as well within the complexity.
Absolutely. I think the US dollar is the dominant currency worldwide. But at the same time, there's challenges in the way it's being run.
So I think we're talking there about the, I suppose, a change in landscape potentially across the world, and an exciting opportunity there as well. What other innovations particularly excite you as workable within the payments industry?
Well, we talked about the crypto space. I think I just came back from Money 2020, and the next topic that everybody was talking about was artificial intelligence and how that impacts it.
Mm.
Now, the AI, everybody thinks about robo advice, about robotics, and so on and so forth. When I think of AI, I just think about the amazing ability of being able to churn through numbers really quickly and really efficiently, large data pools. So I think in the world of payments, that can become a very powerful tool in making sure that payments are safer, in making sure that people are underwritten well, that people understand who the counterparties are when fraud is about to happen, has happened already. So in a way, using AI as a tool for improving the quality of our own, of the whole payment infrastructure and payment delivery, I think is going to be a big opportunity that I think we need to be cautious about. Now, another interesting thing about is if AI becomes also the tool whereby I allow payments, certain payments to go through or certain transactions to happen and so on and so forth, we need to be careful if we're not transferring some of our own biases into some of the
Yes,
tools and payments and so on and
of
so
course.
forth. It is increasingly unlikely, but it's definitely a possibility. And as you know, I'm passionate about financial inclusion, and financial inclusion has a very big dimension, which is driven by the fact that there's bias in some decisions that some of the providers make. And if that is transferred directly to AI, what we're going to do with innovation is actually make exclusion of certain people or certain profiles or certain capabilities, individuals, even greater by using no technology like AI. So AI is going to be, I think, the next big thing. We mentioned a lot about we talked about a bit about the crypto world and the blockchain world. I think what we need to be cautious about is regulation in that sector. And I think we need to be careful that on one side, we want to be regulating in ways that are supportive of the growth of the industry.
Yeah.
But at the same time, we want to also regulation to be there to make sure that we don't have a gigantic crash of some sort going forward. Think about always, people say, oh, regulation is not good, et cetera, et cetera. I always say, okay, think about the automobile. When the automobile was launched in the early 1900s, if there was no regulation, and these cars were driving at any side of the road at any speed, et cetera, with little come up. And so regulation was brought in, and they were forcing people with a red flag to walk in front of the car when the car was moving around the city. So one was an extreme of no regulation. The other one was too much regulation. Both of them coming together came to what we call the rules that we have right now. So, you don't cross on a red light and you let the pedestrian go through the right. So the same thing has to apply for financial products. And interestingly, once regulation is in place and innovative products, their uptake increases.
Yes.
So if I'm reluctant about using crypto for pay as an investment product and so on, the minute I say that the regulators are saying this is safe, I will explore it. Yeah. If I don't know that is safe, there may be some people that will do because they feel comfortable. But the regulatory thing also gives a framework of acceptability, which I think is what some innovative products really need. So does give you a little snapshot?
Yeah, it's been, I've facilitated a lot of panels in the industry, and I think it's been a regular piece that we've heard, and people sort of say, hey, where's the regulator in many of these, whether it's AI, etc. But my own view on this is, or the feeling I'm getting from the industry, guide rails are absolutely necessary, okay, particularly for the regulator. I think the fear that people have, particularly post 2008, is the over-regulation, and therefore it leads to lack of innovation. But the truth is, actually, as you pointed out, I love the car analogy, actually, which is we have guide roads. There are rules of the road, and the rules of the road do allow us to know that actually if we're driving on the left-hand side in the UK, then somebody shouldn't be coming at us the other side. Yeah. We wouldn't get in the car and I think it's true. This can lead to great growth from that perspective.
And it's really interesting that you mentioned that if you look about driving on the left-hand side or right-hand side, there was aligning regulation allows greater exchange. So there's few countries in the world that drive on the same side as the UK. UK is one and Japan is the other. They're both island states, if you interestingly think about it.
Okay.
The rest of the world, most of the rest of the world, is driving on the other side. And it's really interesting. There's a story about how Sweden, that's when they switched in the 50s of going to driving from one side to the other. And they just did it with the understanding that that way they would suddenly the market of secondhand cars that they could buy and sell dramatically increased because people were driving on the same side of the street. So there's an element about regulation which allows also mass adoption and mass adoption across different markets, because we say if I'm following certain rules, I can therefore I can use this product from a different market. And that's also analogous to the passporting that we have in the EU for financial products and so on and so forth. So what the regulation does in a funny sort of way, yes, it limits innovation in the short term potentially, but it expands the market also. So the challenge we have with the digital world is that the pace of change is so rapid. So if somebody with the rules of the road, if it took 10 years to change the rules of the road, it would not be a big deal. If we get the cryptocurrency rules wrong, 10 years is the end of that thing, because our cycles are so much more rapid than they ever were for innovation in the past. So the big challenge of the digital world today is that the pace of change is so rapid. And our skills, our expectations, our ability to change our behaviors, etc., are not as comfortable with change as much as the technology would allow us to do.
Yeah. But I think we've got to sort of try and remember as well, for what purpose? And if the purpose is we could drive mass adoption of something that could actually benefit many, many other people, we've got to put some calculated risk in place for progress, haven't we?
It's always based on you're absolutely right. It's always based on a calculated risk, So I'm saying, what happens if I relax this rule? So if I get the guy with the red flag not to be there anymore, if I just tell him, keep your speed limit to under 20 miles an hour when you're in an urban area. Actually, 20 miles is too much, but anyway, I won't go in the 20-mile limit. So discussion. But ultimately, what happens is that it's a trial and error thing, and you say, how far can I go? What is the right thing? But again, in the world of today, because volumes are huge and transformation happen and exchanges are so quick, a short-term mistake can have a huge cost. Not having the guy with the red flag in the 1900s would maybe have not created as much difficulty as being too tight on a crypto proposition and then suddenly finding yourself that you're excluded from a global proposition that is serving a lot of other markets. So that discussion is the challenge of the digital world is the speed.
Yeah, absolutely. Talking about keeping people included, I wonder if we could, and I know it's a passion of yours and it's a passion of mine as well, tell me more about, you've written a book about this as well. Tell us about the opportunity, the financial inclusion, because it looks like a good thing, but then often people say, actually, couldn't we do good and do well? And you've got some really good views on this.
I totally think that we have to be careful what financial inclusion is about, because a lot of people they talk about financial inclusion and we think of it as an ESG, as kind of something to do with being good and so on and so forth. In reality, it's a much broader opportunity. So if you look at global statistics and we say, okay, there's 1.7 billion adults around the world, 1.7 billion, that are unbanked. The same number in the UK, in the US is 5.6 million. In the EU is 13 million. In the UK is 900,000 people don't have bank accounts. These people are unable to engage with the financial services space. And you say big deal. Big deal is not so true, because if you look at the analysis done by the FCA and the regulator, the average unbanked person has a unbanked premium of about £1,000 on the services and purchases that they make. So the same individual, same circumstances, banked compared to the one unbanked. The unbanked spends more for everything that they need than the person who is banked. That is things like, for example, the energy delivery, the be able to get their electricity and gas being delivered without a meter or to have it done, billed to your bank account. The ability to buy stuff online, the ability to be receiving payments not in checks that have to be cleared, not in cash, and so on and so on. All these things are fundamental to the well-being of society. Now, what's happened with technology is that the introduction of digital technology has pushed us to become more and more reliant on digital devices and moving away from cash. So the if you're unbanked and you rely heavily on cash, and cash is being less and less and less accepted, digital potentially could be seen as a driver of financial exclusion. And in some instances, definitely it has been, especially in certain segments and age groups and so on. But at the same time, the fact that it's now possible to deliver digital financial services at a much lower cost than it would have been before, with much clearer understanding who the client is, much easier ways of doing identification and authentication. So in the past, to be able to be authenticated in a bank, I had to prove that I had an address and I had a utility bill that I could use to show that, okay? That was based on the fact that there wasn't a way of identifying who I was digitally. Today, that is in place. So why would I be requiring people to have these things before you provide them with a financial product? So if I want to get a bank account today for a traditional bank, oftentimes I have to provide a whole series of requirements that are designed for a different era. And if you look at the likes of Monzo and some of the other players, even I would say Revolut to a certain extent, but some of the other players there, they require very low threshold of data provision to provide you with a basic account. As your requirements increase, obviously you have to authenticate yourself more clearly. But that is what is going around. And you have examples of how this proposition is not just good for. In my book, I actually talk about 3 dimensions of the benefit of financial inclusion.
Okay.
And the first one, obviously, is the one we just described, which is the social benefit. So we improve the lives of the individuals, being able to do better with their lives, have broader capabilities, actually become slightly wealthier, and so on. But this leads to an economic benefit. So if I'm able to generate more revenue for myself, if I'm able to purchase things that I couldn't afford before, if I'm able to borrow and create a business, and I'm actually growing the economy. And if I'm growing the economy, I'm actually delivering something that is beyond the social, is the purely economic. And the companies and organizations that are providing me unbanked individuals with the tools to be able to become that contributive individual in the economy are actually able to charge me a fee for this. Yes, and I would be able to pay it. This is not usury or taking advantage of me. It's something that is a fair price. And what that generates is kind of a value chain, if you want, social benefit leading to economic benefit, leading to financial benefit. And what's happening to some of the providers of the traditional financial products is they're kind of trapped in legacy mindsets that modern technology could break through. So the authentication, as I mentioned, for the bank account was just an example, but there's so many others that would allow the provider of the financial service to be contributive to these individuals coming into the financial space, but at the same time generating revenue streams. So if somebody came to you and said, you want, as in the case of the UK, the 900,000 unbanked that we mentioned, would any bank in the UK say, I don't want 900,000 new customers? I think the answer to that is obviously yes, they would like them, 900,000 customers. So I think that mindset is challenged right now by technology, and what technology was seen initially as the driver of financial exclusion is actually becoming the champion of financial inclusion. And I think that is something that is a unique thing, because in the future, what we will see is anybody that has a mobile phone, which is the vast majority of people in the UK and the world too, will be able to use that device to be able to transact and to gain a certain number of financial services that they need to be able to have a better life. And I'm really passionate about the whole mobile phone story. I'm sure you're familiar with the story of M-Pesa in Kenya and East Africa, where people started realizing that they could send minutes from one phone to the other, and individuals in the cities, so the one part of a family went to the city, another part stays at home, they would leave a phone at home and they would get paid in the city. They would convert this pay into minutes. The minute would be sent to the phone in the village, let's say. Yeah. And there the minutes would be sold to people so that they could call and talk to the relatives and so on. So that was the money transfer. The Vodafone people realized that this was the case, and they allowed transfer of cash, and that suddenly became bigger than the economy of Kenya and Tanzania, if you want. So I think there's the view that mobile and digital technology is the enemy of financial inclusion is maybe it was true 10 years ago. It's no longer true today.
Yeah, there's some wonderful examples. I think MasterCard had an initiative called Jazzaduka, where they work with Kenya Commercial Bank and they work with micro merchants to use previous data points of sales over a
Hmm.
period of time as collateral. Yep. Which
Oh,
allowed
fantastic.
which allowed the micro merchant to purchase more from FMCG companies because they had data rather than traditional collateral. So what happened? The FMCG companies got more purchase from them. They could experience a discount. They were able to fund more things, which obviously, as a lot of these are run by women, so has a direct impact on the whole economy. Does a multiplying effect, and the bank was able to provide appropriate loans around commercially. So I think the proliferation of these things again can see actually the dual benefits of both social and economic for everybody to win there. I think is a really strong narrative that I'm taking from today.
Well, one thing interesting, another example that is kind of more banky, if you want, is the whole concept of Nubank.
Mm.
So Nubank in Brazil started off as the ability of offering this free bank account that people can buy into. And with this free bank account, it brought millions of people into the financial space. And it became a global unicorn on the back of that. So the technology was innovative, but not transformational, if you want.
Yeah.
Um, and was transformational revolution. It was the mindset of the founder and
Yeah,
say, okay, I
absolutely.
want to create this product which is basic, it's simple, allows people in, and they get in with getting this payment card. Then they can ask for loans because they create a profile
Mm.
for themselves and they get a credit history on the basis of the payments that they send and receive, and that leads to the ability of getting loans for their business, and that's the ability of purchasing things and so on. And then maybe the thing is, if you think about what the basic needs that we all have in banking, we can call about a variety of financial products. We ultimately have three needs, okay, which is to pay or receive payments, to borrow when I have shortfall, to be able to borrow, and to protect my surplus. And that goes from savings to investments to insurance to pensions and a variety of things that I do to protect my well-being.
Mm.
If I'm unbanked, payments is only cash. Credit is the loan shark around the corner, or if I can get my parents to pay for something for me. And the investments are zero. Is I put money into my mattress and I hope that somebody doesn't steal it, and the value of that will decrease because of a variety of things, including inflation. So by definition, just by being able to allow me to go into the financial
Mm.
space, into the banking world, I actually have more choices and I can become a wealthier individual. And the technology that allows me to do that is now everywhere because most people around the world do have a mobile phone. Many of these are smartphones that can be more complicated,
Absolutely.
but you don't really need a smartphone to be able to do banking on your phone.
Mm.
So as M-Pesa proves.
But one of the things I'm hearing there as well, though, is there's a mind. It's not just about the technology shift; it's the mindset shift that actually is the enabler. I wonder if you could just touch on that.
Um, I think what's happening, there's a mindset shift across the different entities that are driving all of financial inclusion, if you want. So the fundamental ones are the providers, if you want, which is there's a mind shift that's saying there's an opportunity, there's a creation of wealth and value. There's the users. I mean, the end user was saying, okay, you know what, I just get cash, pay in cash. And they suddenly realized that they could do more with their money. There's this reluctance, this lack of education in some segments of society that think that they don't need the bank or the bank is their enemy. And these new providers are proving to them, okay, I can give you banking services without being a bank, so I don't have to be scary to you.
Mm.
The people that were the first user of M-Pesa, the first user of Nubank, many of them didn't even try to open a bank account.
Yeah.
Okay, because they felt. And the third element is what brings all two together is the regulators and the governments, and they're
Yeah.
really realizing how they can support one. So, and this the contribution of these guys, these entities, the regulator is actually very very deep. So Brazil created a payments system that will allow Nubank to be able to send and receive payments more easily, more cheaply than they would do with the normal
Mm.
traditional payments. The throughout in the UK, for example, there's a big drive right now to create a digital ID, and this digital ID can be a fantastic way for being able to identify ourselves. Now, there's a lot of political, philosophical reasons why in the
Absolutely.
UK an ID is not desirable, but in a digital world where we all have accounts in a variety of social platforms? Are we truly as invisible as some of the enemies of digital ID would be suggesting? And so the regulators are slowly seeing that, okay, they can help drive this transformation. As they were the vehicles of reluctance to serve certain customers, for example, the ID requirements that they had, as they're creating and they're adapting themselves to new capabilities, they actually are becoming vehicles for transformation, for financial inclusion, but also other products. So the regulators are seeing themselves a lot more as catalysts, if you want, rather than blockers. And I think that is a really good place to be.
Wow. Well, this is the point of the show where I try and summarize, bring things together a bit about some of the core messages and core insights we've got, but I try and pull out sort of 3 or 4 core elements. But I think there's so much there. So I wonder if I could just share with you some of the things that resonated the most with me. Would that be okay?
Absolutely.
I think one of the first things that struck me very strongly was, and I don't think it was just about language, but innovation. And if you actually want to get that down, well, actually, evolution is more likely to work than actually revolution. But at the same time, then enter the core champions world and understand their needs this year, and not just actually understand their needs for 10 years. Because if you don't look after those needs today, they're not going to be here in 10 years' time. So understanding risk and understanding how to position that to them so they achieve their bonuses this year. Really basic, but at the same time, I think fundamental. And also then how to build a collective. Especially in a large enterprise, there's multiple economic buyers, there's multiple champions, and there's multiple blockers. So having that wider landscape, a map, is fundamental to be successful in that front. I think one of the fundamentals that also came across was the sheer number of significant opportunities. I suppose there's almost the 2 pillars at the moment in terms of AI, but also in terms of crypto. And I think in terms of crypto, in terms of a huge opportunity to drive efficiency across an ecosystem that is, for many places, actually sort of crying out for greater efficiency to make things happen, particularly when it comes to cross-border payments. I'm still stunned by how long that actually takes to confirm. But also the awareness there that we're in a shifting landscape there, that some of the historic pieces could be about to change, and there could be multiple elements attached to that, but there's opportunity. And also I think the regulator came up a lot, which was the analogy used again when we first had cars, which is let's try and strike the balance, is what I was hearing, between regulation being guide rails, okay, because they're necessary, and actually it would lead to mass adoption with that. However, not over regulation, which is going to suppress the innovation. So there's a balance to be struck, particularly on that point. I think the other piece I think that came across very strongly as well was obviously the piece about the economic opportunity of inclusion. Actually, when it comes to financial inclusion, yeah, it's not just an ESG nice to have and a good thing to look like you can do from a PR perspective. We can make tangible changes to people's lives. You get the example of in the UK where just under 1 million people are paying additionally for services where they don't need to if they were in the banking space, and actually they could add value to the economic system. So everybody wins in that sort of space. So they were my key takeouts. I think the other thing I think that really came across as well was the need for considered risk as we move forward. The opportunities are not just exciting, but whether they work and whether they're commercialized and for benefit of all, we need to measure and balance. So they were the key things I took from this. And so the final word.
I think you covered everything. One thing I just like to bring about is that one awareness that we need to have is that the pace of change is a lot quicker than it has ever been before.
Yeah.
So all of these things that we have, which just talked about, regulators coming through, realizing benefits of certain propositions, selling it internally at large corporates, the speed of change is much, much quicker than it ever was before. So if it took a decade to get a new technology adopted in the past, and now it takes months to a new technology to be replacing an old one. So I think what we need to do is that, unfortunately, especially if we're looking at being innovators and working in the innovation space, we inevitably have to be up to speed on what's happening and what is new. And I think that is something that is a burden that we all have to accept, because even just being slightly behind on some transformational capability that's happening puts you at a disadvantage to be able to really drive change.
Well, I think that's a wonderful place to bring the show together. And thank you very much indeed for your insights. Thank you for sharing those. And I wish you very well. So thank you very much indeed for your time. Really appreciate it.
Pleasure to be here. Thank you, Adrian.